Welcome to The Trade on this Monday morning. I'm Nadine Blaney. Lovely to be here with you. And the first direct U.S.-Iranian meeting in more than a decade and the highest level discussions since the 1979 Islamic Revolution have ended with no agreement to end the war, although U.S. President Donald Trump says that he believes Iran will continue to negotiate. Following the talks, he said the U.S. Navy would start blockading the Strait of Hormuz from today to be enforced against vessels of all nations entering or departing Iranian ports and coastal areas. Iran, meantime, has threatened to take action against any foreign military vessel approaching the strait. In other news, Hungary's far-right populist leader Viktor Orban has conceded defeat after a landslide election victory by the opposition TISA party, which has advocated closer ties to Europe. Orban has been in power for 16 years and is seen as an ally of both Russia and U.S. President Donald Trump's administration. U.S. inflation rose 0.9% month-on-month in March for an annualized rate of 3.3%. Treasury yields rose on the data, with the 2-year up to 3.8%. This was Friday. The 10-year up to 4.32%. Aussie 3-year government bond yields rose to 4.7%. The 10-year was up to 5.03%. Now, the U.S. dollar jumped against other major currencies following those U.S.-Iranian talks, with investors seeking the relative safety of the currency on continued geopolitical uncertainty. The Aussie dollar is just above 70 U.S. cents apiece. This is The Trade, so let's get across the technicals now. Michael Gable from Fairmont Equities. And Michael, welcome. Oil, still obviously very topical.
Yeah.
Watching the oil price rise today. Best performing companies, by percentage change at least, being the oil companies. So how do you even forecast the price of oil in this environment?
Yeah, look, I think that, it's too hard to forecast what the price would be, but I think it's quite easy to forecast the direction and the trend of the oil price. And before the Iranian war, I've been talking about energy being the biggest opportunity for this year. We were forecasting oil prices to head higher. I don't have an exact number on where we thought it would go, but for a variety of factors, we thought that energy prices were too low. Energy stocks were, there was too much underinvestment in that area, and they should go up. And obviously, we've just seen an acceleration in all that because of the war. So, look, in terms of the way the oil price is trading, we could see earlier in the year that sort of breakout above the diagonal blue line. It's now testing the 2022 peaks, and the way I see it, the way I've seen it trade over the past few weeks, tells me that it's getting ready to break higher again. So it's consolidating under that horizontal blue line, and I think it's just a matter of time until it breaks higher, and we're looking at much higher levels. So it's very volatile. You get dips along the way. I mean, the strategy for me, for any new clients that have come on board in the past few weeks and haven't had that energy exposure, is just to wait for, the so-called positive news, and you see the sell-off in oil. So we saw that last week. Shares like Woodside were down 10% on the day. I just think any of the dips are a buying opportunity. So interestingly, the consensus view, before the war, was oil, stay away. It's just a relic. You don't need to be invested in it. But even now, the consensus view is everyone's still talking about, when do we buy the tech stocks that have been sold off, and don't buy the oil stocks, because when all of this is over, they'll just all collapse again. So the best money could be made when the consensus is wrong. And I think the consensus will be wrong again, that, oil isn't dropping all the way back to, $60, $70, even $80. It might do so very briefly, but there were issues with supply and demand for oil. We don't have enough time to go into it here. Before the war, now because of the war, there's going to be issues with broken supply chains. We've seen all the huge destruction that's been done in infrastructure in the Middle East. Countries, hopefully ours included, if we're smart enough, will start to build up their reserves. So, no, I think the smart trade is actually not thinking that all these things will collapse. There'll be volatility, but any dip, I'd be a buyer of energy stocks.
Got it. Thank you. Look, my previous guest, from a fundamental point of view, was still talking about gold as a very important diversifier in portfolios. We have seen again, the gold price fail to take off through this conflict, pulled back overnight or over the weekend. So, like, where does that leave gold in your view as compared to oil?
Yeah, look, I'm still bullish on gold. I think in the short term, I mean, gold has been correlated to just the broader market, and I think it's because it's being used as a funding source. So it's quite liquid. We've seen some profitable selling of gold every time that markets look a bit vulnerable. But interestingly, this is a daily chart. Gold bounced very nicely off the 200-day moving average, which is that blue line. So that's a very nice filter for whether gold is in an uptrend or not. Look, I think at worst it will track sideways for a bit, but I think a lot of the heat's come out of gold. If we recall, sort of late last year, early this year, there was a lot of talk about gold and silver, and they've suffered their short-term correction there, and I do think a lot of heat's come out of it. So again, I'd be using any dips as a buying opportunity for gold.
Thank you. Now, so how do we put it into practice then? Because you mentioned buying, on the dip in the price when we see that headline driven in the price of oil. But does that mean you go out and buy Woodside, Santos, Beach? What do you do?
Yeah, look, I mean, we're holders of Woodside. I was a buyer of Woodside last week when it dropped 10%. But one of the other positions that we bought last year, if you don't want to take company risk, is an ETF, and it has the code FUEL. It's a BetaShares ETF. This actually captures all the US oil and gas companies, which have been very underheld by investors. As we could see, this is a monthly chart. So the breakout that happened earlier this year was a breakout above a resistance line that had been in place for about 8 years. And the general rule in technical analysis is, the longer that something sort of trades sideways or consolidates or builds under a line, the bigger the move when it does break out. So yes, the fuel ETF has moved from about $7 to almost $9, but because that resistance line had been in place for so long, I think this is still just the start of a move, and I think any dip in fuel is a buying opportunity.
Now, what about more diversified commodities? So we've talked a lot about oil and gold. What about the likes of iron ore, copper? I mean, do you still see demand staying strong for those commodities, even if we do see a global slowdown brought on by the war in Iran?
Yeah, I do. And I think that with all the disrupted supply chains that we're going to have, that will just continue to increase the cost of commodities. So one small piece of news, which not many people have spoken about in the past few days, is from May, China is blocking the export of sulfuric acid, and that's quite essential for mining copper, mining uranium, producing fertilizers. So there's going to be a lot of damage done, and commodity prices will go up. And basically across the board, we're seeing the classic signs of a commodities bull market. So your BHPs, your Rios, they'll do really well, and I brought along a chart of Rio. Rio's basically knocking on its all-time highs despite everything that's happened. And again, we have a chart that's broken out above a multi-year resistance line. So just because Rio's rallied for a few months, I think there's still a long way to go in the rally. So again, for me, any dips in Rio is a buying opportunity.
What about coal? Because coal has also been a beneficiary of this conflict in the Middle East. Yep. Are the good gains in them?
Oh, look, I still think that the moves in coal are just getting started. So, alternative sources of energy, you've got coal and you've got nuclear power. So we've seen, China's been buying up our cheap coal and using it to their advantage. They're still doing so. We've seen announcements out of Japan in the past few weeks that they're increasing their coal-fired power, and they're restarting their nuclear plants that were shuttered after the Fukushima disaster. But coal prices have been heading higher. The unique thing about coal is that there's been a huge amount of underinvestment, if that sort of makes sense, because no one wants to invest in new coal mines. So supply is very limited. This is New Hope coal. I've brought this chart a few times over the past few months. We could see the breakout at the start of the year, again from a multi-year, above a multi-year resistance line. This is another one I've been happy to buy on any dips. I think that'll go to new highs. So I think in the next few months or so, you've at least got another couple of dollars on top of that share price. So it just makes sense that that countries diversify into other sources of power, and coal's quite easy to do that with, because most countries have their coal-fired power stations already. Even here in Australia, we're closing them down, but we have seen, especially in New South Wales, that slowly get reversed and extended.
All right, we won't talk about the environment, but let's talk about Arafura, because we know China, you mentioned China earlier, really playing hardball when it comes to rare earths. Lynas is in the prime position because it also processes, so we know all that. Arafura is not even in production. I think the final investment decision for Nolan still hasn't come through. It's anticipated in the second quarter. Correct me if I'm wrong on any of that, by the way. What do you think about Arafura as an opportunity? It's got to be more specky, right? Yeah,
it's more specky. I just thought I'd bring a specky along. Rare earths, Lynas. I'm invested in Lynas.
Yeah.
Happy to buy Lynas on any dips. Lynas has done really well in the past few weeks, considering. So that whole story with rare earths hasn't gone away. And look, there isn't really a lot to choose from. Lynas is the big one on our market, and then a long distance away are all the others. But look, a very interesting chart with Arafura. I spotted this one. It seems to be building a bit of a base. We had that spike up in October last year when rare earths sort of hit the front pages in terms of the US and putting a floor under prices and looking to secure more supply. The heat came out, but no, building up a very nice base here. So Lynas has been heading higher, Iluka's been heading higher. I think this will start to follow their lead pretty soon by the way it's trading. So if you're into capturing that upside in rare earths, but you're looking for something a little bit smaller and speculative, then really nice chart here on Arafura. I think if it breaks above that blue line, you'll see a pretty hefty move back up to retest that 60-cent region.
Ending on a specky buy. It's a pleasure, Michael. Thanks
Thank
for
you.
coming. Michael Gable there from Fairmont Equities. Stay with us. That's it for the trade today.